You applied for your first credit card with excitement, expecting a simple approval, only to be met with a cold, automated rejection letter. It is a frustrating, humiliating experience, and you feel like the system is rigged against you because you have zero credit history. You are looking at a wall, and everyone else seems to have already found the door. But here's the part nobody tells you. By the end of this, you will know exactly why banks are shutting you out and how to force their hand, without begging for approval or falling into the debt traps that keep the masses stuck. Most people believe that getting a credit card is a reward for being a good person or having a job. They think if they work hard, save their money, and live honestly, the banks will eventually recognize their value and hand over the plastic. That is a fantasy. It is the kind of naive thinking that keeps you subservient to the institutions you should be using. Machiavelli warned about this centuries ago. He said that to rely on the goodwill of others is to abandon your own security. Banks do not care about your character. They do not care about your potential. They care about your data points. They care about risk. Income is not power. Control is. I remember my own first encounter with this machine. I walked into a bank, confident, with a steady income, only to be told that I was an unacceptable risk. It felt personal. It felt like a judgment on my worth, but it wasn't. It was just a calculation. I realized then that the system isn't designed to help you succeed. It is designed to filter out anyone who doesn't understand the game. Machiavelli started making sense to me, not as philosophy, but as survival. And if this makes you uncomfortable, that's a good sign. Consider the history of the House of Rothschild. They didn't build an empire by waiting for the world to notice them. They built it by mastering the flow of information and leveraging credit when others were too afraid to move. When a king needed funds, they didn't just hand over gold. They demanded control over tax revenues. They understood that the one who controls the credit controls the outcome. They didn't beg for access. They positioned themselves until access became inevitable. That's not luck. That's strategy. 1. The invisible filter. Banks use algorithms, not people. When you submit an application, you are being scanned by a machine that looks for predictability. If you have no credit history, you are an unknown variable. Banks hate unknowns. They don't hate you. They reject you because they cannot calculate your probability of default. Think of your credit history as a trail of breadcrumbs. If there are no crumbs, you don't exist. You are a ghost in their system. The outcome of your application is determined before you even press submit. You must stop trying to sell yourself and start building the data trail they require. Stop applying randomly. Start building a footprint. 2. The secured card leverage. Most first-time applicants make the mistake of aiming for premium cards with high rewards. That is vanity. You are not ready for rewards. You are ready for a foothold. A secured credit card is the ultimate tactical instrument. You put down a deposit, and the bank gives you a line of credit equal to that deposit. It is not a gift. It is a calculated move to prove your discipline. You are effectively paying the bank to let you build your own history. Use it for small recurring expenses. Never exceed 30% of your limit. Treat it like a scalpel, not a hammer. This is the foundation of your future leverage. Build it carefully. 3. The authorized user strategy. If you cannot get approved on your own, you must borrow the reputation of those who have already succeeded. Ask a family member with a pristine credit history to add you as an authorized user on their oldest credit card. You don't even need to use the card. The moment you are added, their account history, their on-time payments, and their low utilization become part of your credit report. You are essentially grafting their financial strength onto your own identity. It is a parasitic move, but in the world of finance, it is a standard tactic for rapid growth. Use it to build the score you need. Then, once you have established your own, cut the ties. 4. The debt-to-income illusion. Banks look at your debt-to-income ratio, but they don't look at how much you make. They look at how much you owe compared to what they can verify. If you have high student loans or other obligations, you are already fighting an uphill battle, but there is a way to manipulate this perception. You must minimize your visible debt before you apply. Pay down your balances. Do not apply for a card while you are currently servicing other high-interest debts. If you appear desperate, the bank will see a risk. If you appear in control, they will see a customer they can profit from. Timing is your greatest weapon. 5. The inquiry paradox. Every time you apply for a credit card, the bank performs a hard inquiry on your report. This is a signal to other banks that you are hungry for credit. If you apply for 5 cards in a month, you look like a drowning man grasping at straws. Your score drops, and your chances of approval plummet. You are signaling desperation. The elite player applies for 1 card, waits for the result, and builds a strategy around the outcome. Do not spam your applications. Every rejection is a black mark that stays on your record for months. Be patient, be precise, strike once, and make it count. The banking relationship. Banks are more likely to approve you for a credit card if they already have your money. Open a checking account or savings account with the bank you intend to apply to. Keep a consistent balance. Let them see your cash flow. When you are a customer, you are no longer a stranger. You are a known entity. The bank can see your habits before they ever issue you a line of credit. It is the difference between a cold call and a warm introduction. By keeping your money with them, you are proving that you are safe. It is a simple trade-off for a much higher chance of approval. The credit bureau surveillance. Your credit report is not just a list of your debts. It is a surveillance record maintained by 3 massive agencies. You must know what they know. Pull your reports regularly. Look for errors. A single mistake, a wrong address, a payment misreported, an identity mix-up can ruin your application. Most people never check their reports until they've been rejected. That is a fatal error. You must be the auditor of your own life. Correct the errors before the bank ever sees them. Control your narrative, or the system will write it for you. The utilization discipline. The bank measures how much of your available credit you use. If you have a $1,000 limit and you spend $900, you are signaling to the bank that you are living at your ceiling. It is a sign of financial weakness. They want to see someone who has access to wealth but doesn't need to spend it all. Keep the utilization under 10%. It doesn't matter if you pay it off every month. The report is often captured when the statement closes. It is a game of optics. Keep the utilization low, and you will look like a master of your own finances, even if you are just starting out. The patience variable. The financial system moves in long cycles, but you are likely looking for immediate gratification. That is the quickest way to fail. If you are rejected, wait. Do not immediately apply for another card. Analyze the letter they sent you. It will tell you the reason. Address that reason specifically. If they say your history is too thin, you need more time. If they say your debt is too high, you need to pay it down. Do not view rejection as a final judgment. View it as a diagnostic report. Use it to refine your strategy, then wait for the right moment to strike again. The ultimate objective. Why do you want this credit card? If it is to buy things you cannot afford, you have already lost. That is the trap. The objective is to build a credit score that functions as a tool. A high credit score is your access to better interest rates, larger loans, and the capital required for real leverage. It is a key that opens doors to assets that actually generate wealth. Do not stop at a consumer card. Use the card to build the score. Use the score to access capital, and use the capital to build an empire. A credit card is not the end. It is merely the first step towards true financial dominance. You have seen the mechanics of the machine now. You understand that the banking system is not interested in your feelings or your excuses. It is interested in data, risk, and stability. You were rejected because you were an unknown. Now you have the path to become a known, calculated, and approved player. The majority will hear this, feel the weight of the effort required, and go back to their comfortable, creditless lives. They will keep complaining about the system. A few of you